Recording in progress.
Hello, everyone. Thank you very much for stopping by. My name is Will, aka Dr. Financial Literacy. I'm a political economist. I'm not a financial planner. I'm not a CPA nor my attorney. I'm just sharing my experience in terms of doing velocity banking. When I first started velocity banking in January of 2024, I was using my paycheck of $3,600 to do velocity banking in general. I was starting with just a portion of my paycheck, and particularly, I wanted to pay down some of my debt. One of the debts that I wanted to pay down and using the velocity banking strategy was a Wells Fargo card here at about 7,558. The limit on the card was 7,500. So I was over the limit and really looking at a way for paying down my debt overall. I started doing velocity banking by taking a couple of my bills, maybe one or two, like my cell phone bill or an electric bill, placing that amount onto Wells Fargo earlier than what I normally was doing. I generally was paying my bills at the end of the month and letting the money sit in the bank until around the 30th. And doing velocity banking as a method of paying down debt, I put that money on as soon as I got one of my biweekly paychecks, went early, and then I went back and charged it. Now that system worked well for me for the first 2 months, and I was seeing a difference without any additional movement of money. So I was thinking, okay, I feel comfortable with this. Then I moved from still using fundamentally the paycheck, but now I was putting more of the money earlier onto that Wells Fargo card. And then I started using other financial resources. One of the first financial resources that I started using, or two, was the cash advance and convenience checks in general. Now, from a cash advance, I was pulling some money from one credit card and then putting it onto the Wells Fargo because it had a lower interest rate through cash advance and convenience checks. So that system worked also, and I think I was eventually got it down to like $3,000. And I started putting more of my bills and more of my money onto the credit card that I wanted to pay down. Some velocity banking advocates call it debt tools in general, but I wanted to pay down the debt. So I put it down on that credit card. Now, at the 12th month of using velocity banking, I'm using multiple strategies and multiple resources to pay down my debt. One of the debts that I added was a line of credit at 50,500. And if you watch some of my other videos, you see my journey as to how I got to the 50,500. I didn't start there. I had to eventually clean up my credit, build my credit, and eventually get a line of credit. This line of credit is particularly a business line of credit that started off at 10.25 and now is down to 9.75. So I'm saving some money on that line of credit. That line of credit allowed me to consolidate some of my debt, and it also allowed me to pay off one of my mortgages in 1 month. I got three of them. I had three of them. So now, again, back to the 12th month. These are just some of the strategies that I have incorporated, and I'm looking at additional strategies. So the pay down is $50,000 debt that started in April of 2024. I'm now using my W-2 income from my job. I'm using business income from consulting on doing velocity banking, improving credit, and reducing the income. I'm also using gifts. So if family members during Christmas, birthday, holidays, or whatever, rather than getting me a gift, I prefer cash. I take that cash and I put it on my line of credit also. I'm also using cash advances. So I go to one of my credit cards, pull off a cash advance, pay interest on that, and pay it down before the end of the month. also use convenience checks. So convenience checks I got from the credit cards, also from the line of credit in general. So when I'm paying my rent or something else that I can't necessarily pay on a credit card, I put the money onto the line of credit, then I use the convenience checks to write it off. But in my instance, the convenience checks that I used were at 18%. Some of the other banks, some of the other credit cards, their convenience checks are maybe 29 to 30%. So you need to look and see if it's worth the amount that you're paying for the convenience check against your credit card. This credit card was about 25%. The convenience checks was about 18%. So it was in my interest that 7 percentage point difference to pay down the debt. Here also, I'm currently bringing in or using about $7,000 in financial resources. Now, when I say financial resources, again, as mentioned, these are the 5 different types of financial resources that I'm using to pay down the line of credit. My expenses for the month generally seem to be running $6,200 because I've now incorporated much more into it. Initially, my expenses in general rounded up to about $4,500, $3,200 if you see some of my previous videos. So now, because I'm using different strategies, my expenses are about $6,200 a month. The cash that's coming in is about $7,000. So my cash flow is about maybe $800 a month now. So I'm using $800 a month as cash flow. Now in Velocity Banking, with this $800 a month, it's staying inside of the line of credit that I have. And it's also compounding when I don't have to pay any additional expenses. So for the last few months, this 800 has, it wasn't totally 800, but it's about 800 now. My cash flow after all the bills have compounded inside of the HELOC to pay it off. So one of the things that I found interesting is that for the first 3 years or the first month, particularly of my HELOC, I'm simply paying the interest. But at the same time, I'm throwing everything that I can into the HELOC, not as a principal payment, is going in as a principal payment. But in my mind, all I'm doing is taking any type of cash that I have, dump it inside of the HELOC, and that has gone to pay down the principal interest. So I actively every month pay maybe about say about $400 a month in interest only, but then all the other resources that's going in is helping to pay down this principal. Now, what has the principal looked like over the last 7 to 8 months? Well, according to when I first got the line of credit, the highest balance on that line of credit was $50,743. The lowest balance on that line of credit was $40,343.67. Now, again, I was able to go from the high to the low with, first of all, just making my interest only payment, because you can do that on the HELOC for a number of years. It varies with the HELOC. And then I was putting in various resources without necessarily saying that this is a principal payment. All I've been doing was putting it in, writing checks out of it. So I've been putting it in, paying my light bill, water bill, phone bill, groceries in general, out of the HELOC by just throwing everything in. Now, another thing, I'm sorry, that I should have listed was that I'm also pairing the various strategies with a credit card. So I have 3 credit cards that I'm using So I have about 3 credit cards that I'm currently using that I try to pay all my bills on throughout the month, then pull money back out of this HELOC to pay back the debt. So again, I'm putting everything that I can in because these are all expenses, about $6,200 in expenses. I try to get as much as I can onto the Visa or MasterCard, and then pay it back after the statement closes on my HELOC. So I'm trying to keep it down as low as I can. But there's a couple of things that I do pay out of the HELOC directly with a check out of the month that's not necessarily hitting a credit card, like 2 mortgages. Those are the main things that I'm having left with that I'm trying to see what strategy I can have that'll come out of it. So again, just wanted to recap in saying that I have a line of credit. The highest that it's been this year, 50,743. The lowest has been 4343. As of today, is back up to 44,350. And I've really only been paying the interest every month on it. And it's really these other strategies, which are all expenses that is going into the HELOC and helping to pay down the principal. So the system seems to be working well. If I would have still been having just the mortgages and the other debt that I have, I may not have been as far in advance in general, but by consolidating some of them, putting in one place. One of the cautions that I have is that although the HELOC has gone from 10.25 to 9.75, the range that my business HELOC, this is not a personal HELOC, this is a business HELOC, can range from 4% to 18%. I was able to get this on one of my properties. Now, I wish I would have been able to get it as a primary homeowner. Primary homeowners HELOCs probably are a couple of points much lower than the investment HELOC that I have. So this system could go much quicker if I was living in one of my properties that I can have a lower interest rate and pay it down much quicker. But I'm glad I'm in the situation that I'm in. I'm glad I'm starting to use velocity banking, where the principle is I'm taking my entire paycheck, putting it inside of a line of credit, and then pay my bills from it throughout the month. But it's really only 2 bills that I'm paying, 2 mortgages, and I'm paying the vast majority of my expenses, this 6,200, onto the Visa card. And at the end of the month, when the statement on this line of credit closes, then I go and write checks to pay down the balances. All right. So just wanted to give you my take of how I have used velocity banking since January of 2024, how I will continue to use it with additional strategies. One of the things that I'm working to pair with is definitely SMART goals. SMART goals. And a SMART goal is a goal that is specific, measurable, attainable, specific, attainable, reachable, and time bound. Because differently, when you look at different videos, the acronym SMART is going to be said or stated in different ways in general. So for going into 2025, the SMART goal that I'm wanting to achieve is that I want to specifically pay down my debt by $103,000. That'll be the last 2 remaining mortgages that I have, and then I can deal with the other credit card debt in general. So thank you for stopping by. And if you're interested in working with me or my team in reducing your debt and learning velocity banking, please give me a call or email and be more than happy to work with you or you and your family. Once again, thank you very much for stopping by.